I'm going to assume you've bought your first investment property already. And so today, let me share the 7 things I believe you should consider when looking for investment property number 2. Hi, my name is Tony Law from Your First 4 Houses, and my channel is all about helping you achieve financial freedom through property. If this is your first time here, be sure to subscribe to the channel and hit the bell notification icon so that you don't miss out on any of the free content that I share each week. Now, one of the reasons I branded my business Your First 4 Houses is because I personally believe just 4 of the right type of property can give you a good income and a great lifestyle. But as I say, they've got to be the right type of property. It therefore sort of follows on that unless your first investment property is something incredible, you're going to need more than one to become financially free. So if you've already bought number 1, what do you need to consider when buying property number 2? Well, in my opinion, you should be thinking, how can property 2 help me to get property 3 and 4 and beyond? And so what do I mean by this? Well, I know lots of people who start off with the very best of intentions, wanting to build a portfolio and become financially free. They may have enough money for a deposit, and so they go out and they buy house number 1. But then they kind of stall. It could be because they've got no more deposit money, or because they found the first one really hard work, or maybe they have a problem with a tenant, or whatever. But they just kind of stall and they don't take any further action. However, some people do push on and they get that second investment property, which is brilliant. But for many, this really is as far as they go, even though they may have started out with big dreams, wanting to build a portfolio and live off the rental income, like my wife and myself do. So I believe you should approach the acquisition of property number 2 by thinking to yourself, how can this property help me get properties number 3 and 4? And so with this in mind, I'd like to make 7 different suggestions. Firstly, when you're looking for property number 2, can you find a genuinely discounted property, often referred to as being below market value? If you can buy a property number 2 at a genuine discount, you can potentially refinance fairly quickly and pull some of that deposit back out of the deal, which you can then use to go and buy property number 3. Now I'm going to hold my hand up here and say I personally didn't believe it was ever possible to buy a property at, say, I don't know, 20 to 25% below market value. But if you look in the right areas and work with the right type of sellers and create win-win solutions for those sellers, it is possible. And I've now done it many times. Next, is there a way to add real tangible value to property number 2? If you can add sufficient value, again, you can refinance and pull a percentage of your money back out of the deal and use this to go and buy property number 3. Can you buy property number 2 in an area where there's a better chance of capital growth? Now I appreciate this one is just a little bit speculative, but I also believe it is possible. For example, could property 2 be located on or near a new transport link, perhaps a new train station or tube line? Is the area about to undergo some serious regeneration? Has a big new employer just announced that they're about to move into an area and create a lot more jobs? These are all good examples of where you might get a better chance of capital growth potentially. Accelerated capital growth means you can refinance property 2 sooner and then use these funds to go out and buy property number 3. When you refurbish property number 2, document everything. Now I've talked about this before, so I'm referring to before and after photos, video walkthroughs, floor plans, etc. Because this material might be just what's needed to convince a joint venture partner to help you fund property number 3. By the way, if you're finding this video helpful, it would really help me if you take a moment just to click on the thumbs up button below, if that's okay. Thank you. Can I suggest some investment in your property education might help you to finance property number 2 without needing to use your own cash? So you can then use this cash to go out and buy property number 3. Now there's lots of places to get this training, and dare I say, you might want to check out the online property masterclass where we cover this subject in a lot of detail. If you don't need the income from property number 1 right now because you've got a well-paid job, could you save this income and use this to finance property number 2? If property 1 was a rent to rent, for example, cash flowing, say, I don't know, £800 a month, that's £9,600 a year, which is potentially enough to get you into 2 rent to rents, and perhaps one of them might have an option on it. Lastly, could you perhaps pool your resources with someone else and go in together to buy property number 2, and perhaps do the same with property number 3 and maybe the same with property number 4? This might be a good friend or a family member, but it's a great way to gain real momentum, especially if part of the deal is that you're going to hold each other accountable. But if you're going to do this, please, please, please make sure you have a formal contract in place, even if it's a family member. Now, if you could think of any other way to structure a deal number 2 so that it helps you flow on to deal number 3 and 4, I would love it if you could take a moment to help others by commenting below. That would be absolutely wonderful. One last thing, just before you go, be sure to grab my free 50-point checklist, which will really help you the next time you want to buy an investment property. Until next time, I'm Tony Law from Your First 4 Houses, with online training that helps build your property portfolio.